take a look at cash flow from assets. So in order to calculate our cash flow from assets, we need to figure out first our operating cash flow, capital spending, and the change in working capital. As always, we've downloaded our data. We have our partial income statement and 2 partial balance sheets. So if we take a look at the equation for operating cash flow, we can see here it's EBIT plus depreciation minus taxes. So it looks like we're going to have to continue our income statement. So let's go ahead and calculate some values here. And then we can figure out our operating cash flow. So EBIT is going to be our revenue minus our operating expenses. Okay, interest expense is provided for us, so it looks like it's $18,200. Then we can figure out our taxable income by removing that interest expense from our EBIT. And finally, our taxes is going to be a 40% on our taxable income. So that should do it for figuring out our operating cash flow. Let's move our values here. So let's look for EBIT. Okay, and depreciation. And finally, we want to know our taxes. So if we do the math here, again, we're going to be adding up EBIT and our depreciation, and then subtracting our taxes. Okay, so let's see how that goes. Fantastic. Okay, so part 1 is completed. Let's take a look at part 2. We need to figure out our capital spending. So in this case, we'll take a look at our equation here. Okay, so basically we're looking at our net capital spending, which is equal to our ending fixed assets, so in this case 2017, plus our beginning fixed assets, which is 2016, and finally our depreciation, which we've already computed here. So in order to figure out our net fixed assets, we need to know our fixed assets, and we also need to know our accumulated depreciation. Okay, so one thing you'll notice in the balance sheet is they don't give us our accumulated depreciation, but if we recall, accumulated depreciation for the most recent period would just be the accumulated of the previous period plus the current depreciation. So that should give us our accumulated depreciation. So once we have that, we're simply going to subtract our fixed assets minus our accumulated depreciation in order to get our ending net fixed assets. And we can do that. We don't have to worry about intangible assets because they're equal to each other. So again, we're going to do fixed minus accumulated. That's going to give us our 2017 number. And now we just need our 2016 net fixed assets. Okay, and we've already figured out our depreciation, or it's given it to us. So now that we have these 3 values, we can figure out our capital spending, or our net capital spending. So we're going to be subtracting the difference between our ending and our beginning, and then we're going to add our depreciation. Okay, so it looks like it's 80,000. See how that goes. Wonderful. All right, so now we're on to part 3, figuring out the change in net working capital. So let me just pull over some categories here, and then we'll explain it a little bit. Okay, because remember, our working capital is all about our current assets and current liabilities. Okay, so the formula is going to be our end net working capital minus our beginning net working capital. Okay, and if you recall, our working capital is going to be our current assets minus our current liabilities. So let's go ahead and get those values here. Liabilities. So let's start with our 2017 numbers. Okay, so first we want to figure out our current assets. Remember, those are assets that can be monetized within a year. Okay, so our current assets will include, of course, our cash, very liquid, our accounts receivable, again, because we're getting that money hopefully within the year, and then finally our inventory, because we should be able to sell our inventory within that year. So that's our current assets. Okay, current liabilities, anything that we owe within a year. Okay, so that's notes payable and accounts payable. So we figure out the difference, and that will give us our ending net working capital for 2017. Okay, and we'll go ahead and do the same thing for 2016. So again, we're looking for the sum of our cash, accounts receivable, and inventory. And our current liabilities are going to be our notes payable, and our accounts payable. Okay, and again, we're going to figure out the difference to give us our net working capital. And obviously we want it to be a positive number, hopefully. So it's looking good. Looks like we've actually increased our net working capital. Once we know that, well, if we take a look at the change is simply going to be the difference. Okay, so we're going to figure out the difference between 2017 and 2016. Okay, so let's go ahead and punch that in. Wonderful news. So finally, we're going to put it all together. So the cash flow from assets is going to be, take a look at an equation here. Okay. So it's going to be our operating cash flow minus our net capital spending minus our